Well, if you have a car accident like this fire on a tri-state road, you expect your insurance to write you a check.
Yeah, you do, but many drivers don't realize they may still have to pay off their wrecked ride. Consumer reporter John Matarese has a consumer alert all drivers need to know. John.
Yes, Kristen, imagine buying a new car and oh no, just 1 month later, it's totaled. No problem, you figure, because you have insurance. But one young mom from Lebanon, Ohio just learned that even if you have collision coverage, you could still end up thousands of dollars in the hole. Vanessa Carnes is a single mom with dreams of becoming a nurse to help build a better life for her and her young daughter.
Are you excited?
But 1 month after buying a used 2010 Honda Accord, the Accord caught fire as she was driving home.
It's like I got out of the car just in time before the whole front end started going up in flames.
Vanessa escaped unharmed, but the car was a total loss.
This is where the car was fully involved before the fire department came.
The hurt got worse when her insurer, Geico, offered her just over $4,000 for the car she bought for more than 10 grand just a month earlier.
Are only paying Blue Book value on the car, so they're only paying a little over $4,000 on the car, which leaves me with over $7,000 left to pay on the car.
Vanessa's dreams of nursing school, like her Honda, were going up in smoke. Her aunt Amberly Browning says she won't be able to afford school if she has to pay off the car.
Something has to be done. It's 3 weeks of a car. You don't go into a dealership to buy a car and expect it only to last 3 weeks.
But this can happen to almost anyone with a car loan if your car is totaled that first year of ownership. The problem, you see, is that you're upside down in the loan, owing more than your car is currently worth. Let's say you bought your car for $20,000, but now the insurance company values it at just $15,000. If you wreck it, you still have to pay the lender $5 grand.
If the loan value is greater than the actual cash value of the car, you as an individual are going to have to pay the difference.
Insurance Board President Ron Evelai says that's why gap insurance is so important. Gap insurance covers that gap when you owe more than the Blue Book value, like Vanessa. The FTC recommends it if your down payment is less than 20% of the cost of the car. Vanessa, though, only learned about gap insurance after it was too late.
I don't know, I worked really hard to get the money up for a down payment on this car, and now I got screwed.
Well, we do have some good news, however. After we contacted Geico, the insurer has now agreed to offer Vanessa almost another $2,000 for her car. The dealer now says they will lower the price of another used car for her so that Vanessa can get back on the road and get her career back on track. Bottom line, consider gap insurance. You don't waste your money.